Consumers have had a tough financial time in recent years, and even as the economy starts to turn the corner in terms of lower inflation and the beginning of lower interest rates, financial pressures still remain, with some households heavily indebted, even having to consider getting help to better deal with their situation. Well, to unpack how they're currently viewing the South African consumer and how consumers can navigate some of the existing challenges, I'm joined by Calvin Ndlovu. He's executive for Unsecured Recoveries at Nedbank. Thank you very much, Calvin, for joining us. From your perspective, what is the state of the South African consumer right now? And I ask this in the context of us just learning from SARS earlier today that workers have tapped onto some 49 billion rand of their retirement savings through the new two-pot system.
Hi, good afternoon. Definitely there is a stress, and a lot of people are distressed based on the interest rate. And remember, we're still coming from the COVID, still that impact, although it's 2021, but that impact is still there because a lot of people lost income and they were still paying high interest rate. So most of people are still over indebted, and most of people are living on debt because they are taking credit to try to live from credit. So it's from hand to mouth on a monthly basis. So we see a lot of stress coming through from the people that were paying all along, and now we can see, at least with the two-pot, that has helped in some instances, but there's a lot of debt that the people that are still feeling under stress.
Yeah. So, Calvin, we've had a 25 basis point cut in interest rates in September, and we're generally expecting one this month. That would be a cumulative 50 basis points. How impactful do you think that might be on consumer balance sheets?
It's still very low, as I said, that if you can imagine, if ever you've got three products, you've got a personal loan, you've got a credit card, you've got a vehicle finance, and you've got a home loan. And all these three need to be financed. And if you look at the 25 basis points, you're looking at the repayment of a 10,000, you're hoping for a relief of about 500 rand. So it's not too much that it can relieve, that we can say that it's going to relieve stress and debt. But obviously is that as these basis points and interest rate reduces, that's when we're trying to teach, and in terms of asking people not to spend on that debt, but to put it into repayment and try to clear off the debt. But it's not helping, it's very low.
So some consumers, as I mentioned in the introduction, they've had the toughest of times, and they may be considering going for debt counselling. What, from your perspective, are the pros and cons of going down this route?
The pros are good because debt counselling offers a consolidated debt. You're not only focusing on your priority as a one credit provider, but it's different credit providers, which helps in that they consolidate, because most of the banks or credit providers, they wouldn't want to take debt from somewhere else because it's a risk for them. So it's good, but the problem that with the debt counseling that it comes is that, remember that debt counseling is only for over-indebted clients. So if ever you're not over-indebted, you can still go to your bank and negotiate a better repayment option, which, like in Nedbank specifically, we've got like a range of options where we can give you a time not to pay for 3 months, where we can restructure your account, where we increase the term, and where we can reduce your interest rate. But debt counseling is also good in a part where you're over-indebted and the bank cannot solve for your debt alone because you have spread your debt across. So debt counseling comes in that. But there is what we have seen lately is that there are debt counselors that are selling not what is correct for the client, where they will, because remember, debt counselors are getting fees for the first 2 months if ever you go into them. So there are some clients that actually are not over-indebted, but because they are stressed and they don't know who to talk to and they're embarrassed about debt, they rather run through to the debt counseling instead of coming to their credit provider, which has got better options.
So basically you're saying that if a consumer has financial trouble, they should go to their bank first and exhaust that avenue before deciding to go for debt counseling?
Yes. That's why I said that we've got different solutions. And the problem is that when our clients feel the pressure and they lost income, they don't want to talk to us because they think that the bank only wants to repossess, only wants to come up with a legal action. Meanwhile, that's not the case. I think that was the old strategy prior to more than 20 years back. But recently, we have different options. We offer even the self-service if ever you don't want to be called. But we've got different options, as I said, that we can reduce your repayment, we can increase your term, we can reduce your interest rate to help you. So it's easier when you come to us before you go to the debt counselor. Your debt counselor should be your last option that you go to if ever you think that the bank didn't help you.
All right, Calvin, thank you so much for giving us that information there. Calvin Ndlovu, he's the executive for Unsecured Recoveries at Nedbank.